afternoon, Mr. Richman. What can we do for you today?
I'm opening up my brokerage account. Is this enough?
You don't have as much money as Mr. Richman? How much money do you need to start investing in stocks? I get asked this question many times. Nowadays, with the advances in information technology and increased competition among different brokers, you don't need much to get started. You don't have to be as rich as Mr. Richman. But here are some things that you should consider before deciding how much you need to invest. Trading fees. You need to buy enough to protect your profits from trading fees. If you are starting with a small amount of money in your investment account, trading fees could really eat into your profits. Let's take a look at an example. Imagine you are starting with just $100. You buy a single stock for $100, and due to the minimum commission, you immediately pay a $10 trading fee just to buy in. Then the stock price goes up by $20, giving you a nice 20% return. That's great. It's time to cash out and lock in your $20 profit. When you sell, you pay another $10 in minimum commission. Unfortunately, your gain was completely wiped out by the trading fees. You started with $100, immediately lost $10 in trading fees when you buy, you gained $20 when the stock went up, and paid another $10 in trading fees when you sell. You ended up with your original $100, no better than when you began. Now, minimum fees are only significant when trading small amounts. When you trade larger amounts, it becomes insignificant. If you were to invest $5,000 or more, a pair of $10 trading fees would only reduce your profit by 0.4%. No big deal. On the other hand, if you invest anything less than $2,000, you're instantly down 1% or more before your stock even have a chance to move. If you plan on investing $5,000 per company, then you can probably go with any major online broker. Most charge between $5 to $10 per trade, and they continue to drop their prices. But if you are starting with less than $5,000, which is totally fine, you may want to seek out a broker that offer free trades, such as Robinhood. But be careful when trading with free brokers. There is no such thing as free things in the world. Surely there must be a catch. I done some digging, and according to this article by CNBC, Robinhood do not give the best execution. They seem to be a buy-sell spread. This means that if the market prices are at $50 now, they might charge you $50.10, and they earn the 10 cents. This is clearly a conflict of interest. Furthermore, this broker is losing money. If you look at their financials, although they are growing top line, they are making losses on the bottom line. I honestly don't feel comfortable holding any of my cash and stock in a company that's making losses. So be careful when you are using zero commission brokers. Diversification. I know there are many advice out there advising you not to diversify your portfolio. Not diversifying is a viable strategy, yes, but it should be for the more experienced investors. If you are watching this video, chances are that you are new and might not even have started buying your first share. So please diversify. Even for me as an experienced investor, I diversify as well. I currently hold 15 different positions. You want to avoid piling all your money into a single stock, since this leaves you overly concentrated and your entire investment tied to a single position. Your goal should be to own between 10 to 30 positions. In the previous screen, for a broker charging $10 minimum commission, you should have $5,000 in each position. So if you need to spread your investments into 10 different positions, that's $5,000 times 10, and that will be $50,000. But if you are just starting out and perhaps do not have much cash on hand, you can start off with just 5 different positions. So 5,000 multiplied by 5, that's 25,000. But eventually, try to spread out your risk to at least 10 positions as your portfolio grows and as you contribute your monthly income to it. Whatever your starting point, just keep in mind you want to get some healthy diversification as soon as possible. Stocks allocation. Now let's look at the next question. How much of your personal savings should you allocate to the stock market? In general, I try to allocate as much as possible in the stock market because the incredible power of compounding can create so much wealth over the long term. Every extra dollar you invest wisely in the market could be worth $5 or $10 or $20 more in the future. However, there are some very important guidelines I follow to limit how much I invest in the stock market. Never invest so much money that it would risk your financial future. Never invest money you need in the next 5 to 10 years. And also, never invest so much money that you can't sleep well at night. If you have invested so much money in the market that every little pullback and correction keeps you up at night, then you either put too much in the stock market or stock investing may not be right for you. Now, I'm not suggesting that you shouldn't care about or keep track of your investment. Quite the opposite, but you don't want too much stress on investing. It's unhealthy and will drive you to make bad investing decisions driven by fear and emotions. Rather than asking how much money you need to invest in stocks, you should be asking yourself, what is your comfort level? Agree or disagree with the video? Subscribe, leave a like and comment down below, and I will see you in the next video.